What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock, what you should be looking out for the future. I'm also going to break down some strategies that anyone could use to make crazy returns on NIO if they do have these steps in play. So I'm going to break down what these strategies are that can make crazy high returns, 1,000, 2,000% returns on NIO if you learn to play it right, and why this is actually a big opportunity, believe it or not. Now, before I break anything down about NIO and what this strategy is, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, but benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is any could be a free NIO share, a free Tesla share, or a mix of all of them. It's a limited time offer. The offer ends in just 1 week, so check it out before they run out. With that set up of the way, let's get on with the video. So anyways, when it comes to NIO, guys, even though this thing is trading a little bit green for the day, at least at the time I'm recording this, I want to note something very important, and that is NIO is very low compared to its all-time high. And what else you could actually note from this is the fact that NIO is a risky company. There are risks involved in investing in any company. And with that said, it's important to know these risks if you are trying to invest in this stock. However, we could see something that's very important. NIO is a stock that tends to be affected by the QQQ. It tends to be affected by the overall market. Now, this is important because you could see both of them had this spike, this big drop, spike, drop, spike, drop. NIO was actually spiking for some time when the QQQ was barely pushing up. It was holding up. Then they both came down pretty hard. QQQ bounced, but NIO was actually lagging behind as of recent. And this happened to a lot of EVs because of many macroeconomic situations, also because of Tesla. That does actually affect NIO to some degree, and many other factors. But for the most part, NIO tends to move with the markets. And what happened in this market was the small caps got annihilated. I'm sure you guys noticed a lot of small cap companies out there. If you're looking at like ABCT or something else like AMC, that's like a medium cap, or GME or whatever, those companies have taken big hits for the most part. And they've been hit compared to their all-time highs in a very hard way. So what does this mean for the future? This tells me that the collective market took a hit. This is why NIO is down. But a lot of these stocks, when the bull market comes back, remember, we're in a bear market, okay? We're in a bear market. That's why the market is just performing this way. But look at what the bull markets look like. Straight upside. The market is going to do this again. The bull market will return in the future. Look at this on the weekly. Look at SPY on the weekly, guys. Eventually, we are going to see the market run to the upside like this. And this downside we're seeing is so insignificant compared to the crazy upside from the past few years. Insane. All right. But anyways, what does this have to do with NIO? When the market recovers, NIO, in my opinion, is going to recover. Now, there are other macroeconomic factors that affect it, so those will also play a big role. But regardless of those factors, as long as things remain constant and as long as NIO continues to grow, I'm very bullish for the long-term future. So here's what I'm trying to get at. If you want to make a crazy return on NIO, you could buy shares. And the benefit of shares is they don't have an expiration date. You could hold shares today, tomorrow, for years, for decades, and you could still make the crazy return. That's why shares are very reliable. But there is another way to make even higher returns than shares with a little bit more risk involved. So if you want to make a crazy return on NIO, if you want to like 5x your money, you need NIO to go from 8 all the way up to 40 just from shares alone. If you want to 4x your money, if you're buying NIO at 10 bucks, just to make it simple, NIO has to go to about $40 for you to 4x your money. So see how much NIO has to run for you to make big returns on shares. And yeah, I mean, you can make good returns, but learning about options is a way to make even bigger returns if you learn to play them right. The first thing I want to say about options is they're risky, guys. Be careful with them. If you are going long on options, so if you're buying calls, you're buying puts, you could lose everything you put in them if things don't go as planned. And that's why you have to have those stop losses. You have to have safety precautions and different strategies to help you. And also, you have to be very careful with where you enter and exit these positions. And on top of that, here's what I want to let you know if you are trying to get started. Do not jump in immediately. Don't you dare do that, because you will most likely lose. Not financial advice, by the way. Most people will lose when they start. Even if you make a big win, if you keep doing it again and again, you're eventually going to end up losing, most likely, because it's very difficult and this market is not easy whatsoever to trade in. All right. For those who actually tried, you know exactly what I'm talking about. Here's what you got to do if you want to be successful: research options first. That's what I would recommend. Research, find someone that's very successful in it, find a course on the internet, watch countless YouTube videos, learn about the Greeks of them, the delta, the theta, all these different things, what the vega is, what implied volatility is, how the prices affect them, and then learn about some strategies. You don't need to know the best of strategies. You don't have to know every strategy out there. You could just stick to the basics and still be very successful with them, which just includes just buying calls or buying puts at the right times. That's the main thing. I also like to sell covered calls and maybe sell puts once in a while, but I haven't been doing it as often as of recent. I've been just buying them more. But anyways, I want to get into what this all means for NIO, what the strategy is with options. So when you are buying calls, I'm just going to focus on calls. When you buy a call, all you're doing is you're buying a contract. And this contract gives you the right, but not the obligation, to buy 100 shares at a given price. And you have an expiration date for the contract. So if you buy I don't know, let's just say a March 2023 contract for NIO. All right. This is the expiration of the contract. If you try to buy these contracts, you guys could see how it gives a price right here for these different strikes. The strike would be the price in which you pay for the contract. Now, I forgot to mention something. I'm going to mention this real quick before I kind of continue. Nothing I'm saying is financial advice. And also, if you are planning on playing, you have to research, but don't you dare hop on immediately. Play with paper money first. Believe me, that could be one of the best decisions you make if you are trying to play and day trade. When you play with paper money, you have a virtual 100,000, $1 million, whatever. It's like a virtual money amount, and you could use this money amount to trade. And you could practice strategies. You could practice buying calls. You could practice and see how you do if you actually had that money. And over time, you could start learning and learning and learning. Once you perfect your strategies, you could transition to real money. Once you do a lot more research, you know the risks and you're careful. And once you understand all that, you could be very successful. But remember, paper money is what I'd recommend starting with. And what platform allows paper money? One of them is Webull. That's one of the reasons why I promote it. It's very good for people that are beginners in the trading space. We're able to trade with paper money on Webull to start off. That means you get to practice on there, right? That's part of the reason why I promote it. And like I said before, you get 12 free stocks if you sign up. But anyways, getting back into this, let's pretend that you're all of a sudden doing the research. You're now very good at options. You know how they work. What would you be watching for? And this is just going to be a hypothetical example. Do not copy this. It's just for fun, okay? If I'm looking at the March 17, 2023 the expiration date, this would mean that I'm buying calls. My plan is to go long on calls. When you're going long on an option, it means that the most amount of money you lose is what you put in. So if I buy $100 worth of calls, the most I could lose is $100. I won't lose 200, 500. No, you only lose what you put in when you go long on calls and puts. If I buy $1,000 worth of calls, same thing. All right, the most you can lose is 1,000. The most you can make is unlimited, essentially. Depending on your broker and things like that, some of them limit how much you can make, but it's not that bad, right? They'll say the most you can make off this contract you bought for 100 is 5,000 or 10,000. Still pretty good money, right? But anyways, we don't need to worry too much about those specific details. When you buy a call, it's affected by many factors like implied volatility, the delta, which is known as the price. You cannot forget that. There's also a theta decay because as you get closer to the expiration date, the value goes down. So let's actually give you an example to make this simple. Let's say I believe NIO is going to get a big pop. Why do I say that? When people buy options, they're not just gambling, they're using logic, they're looking at logical assessments, they're looking at fundamentals. Imagine I'm thinking, okay, NIO is likely going to have strong deliveries, big fundamental improvements. The market's going to start recovering a little bit sooner than some people expect. Maybe NIO can make some big moves to the upside. You also have to note the fact that in September, this thing was in the 20s. There were many instances where NIO hit the 12s. We could get a pop to the upside back to like 15 bucks over the next few months. It's very likely NIO will do that. So let's just say I think NIO is going to go to at least 15. I decide to buy a $15 call for March 17, 2023. That is the expiration date. When you buy one, the first thing is, hold on, it says 0.8. Remember, you're buying the right but not the obligation. It's a contract that gives you the right but not the obligation to buy 100 shares. That's like 80 cents per share, or $80 in total. All right. So please don't forget that. You have to move the decimal places 2 times to actually see the real value. So one contract is worth 80 bucks, right? All right. Do you really want to just buy one? Let's just say I put in way more money than that with money I'm willing to lose, and I want to buy 25 contracts, right? That's only $2,000. I think that's too low. Maybe 50 contracts, because then it's only like 4,000, right? So you only put in $4,000 into these contracts, and you're willing to lose that 4,000, right? What this says is you have, if NIO hits $15, right, you will have, if it goes above 15, it's going to be an in the money contract, and you will have the right but not the obligation to buy it at $15, 100 shares per contract. If I have 50, it's going to be 50 times 100, which is equivalent to over 5,000. Now, the beauty of options are you can always exercise them. And what this means is if NIO goes to $100 a share by March, you could still buy those shares for 15 bucks. You could buy 100 shares per contract for still $15. So you get a killer deal. Then you can hold these shares as long as you want. But I'm not going to talk about exercising options. That's not my priority, because most people want to flip these options. They want to sell the contracts for more profit. And let me give you an example. So my strike is 15 bucks. The expiration is March. Let's say NIO, it goes between either $10 and $30 by March 2023. Let's not mess with implied volatility or other factors. We're just going to pay attention to the delta, also known as the price. Now, also note that in one of my earlier videos, I talked about NIO hitting at least 50 bucks next year. If the market does recover by then the hundreds the year after, then at least 200 as the years pass by. I really believe NIO could quite easily achieve this if they keep growing and geopolitical issues ease up. I mentioned this all yesterday. So how does this connect? Here it is. If you spend, hold on, $4,000 on NIO calls, that means you're betting the stock price will go up. With the $15 strike that expires in March 2023, these contracts that you just bought, these are the values of those contracts given where NIO's price is. So if NIO runs to $30 by November 30th, those $4,000 contracts would be worth $73,000. See that $4,000 to $73,000, 1,800% return on your investment. We're not even adjusting implied volatility. It probably would be way higher because it would move in such a short period of time. And notice how as time goes on, the amount you make obviously could go down a bit. You would only make 71,000 by the time March comes if it takes longer, if for NIO to get to 30 bucks, or if NIO barely hits like $20, you would still make over 22,000 by March. So it's a pretty good return. You'd still make over 500%. But here's the risk. Here's the risk. In fact, let me actually change one little thing about this. Everything's going to be the same. Let me just make the bottom price $8 instead of like $10. I think that's going to be a little bit better. Let's say NIO drops down to like $8. Well, you put in 4,000. If NIO crashes to $8 in November, then the 4,000 is going to drop to 1,300 and you're going to lose about 2,700. See that? And if NIO's share price drops and drops and drops and drops, the max you'll lose is about $4,000. This is the absolute max. So you need NIO's share price to start going up to make a profit on these options. Another thing could be implied volatility. I'm not going to go into the full details about that in this video. We're just focused on the prices. If NIO hits like 20 bucks right here, and we manage to hit that around February or even like January, which I think NIO easily could, you could easily turn that 4,000 to 32K. That's a crazy return. If NIO hits $20 in December, hey, your money is going to turn into over like $30,000, make 700%. So crazy high returns if NIO's share price does go up. But it's risky. Obviously, you could lose everything you put into those contracts if they don't go as planned, or if NIO does not hit these high numbers by these dates, right? And what a lot of people do is, look, you don't have to hold the contracts all the way till the end of March. You could sell them the same day you buy them, these contracts. So if you buy these contracts, for example, when NIO's like at $10.50, then all of a sudden NIO has a huge catalyst and NIO goes all the way up to $12. You could actually, the contracts would be worth an extra $2,450 for a total of almost $6,500, meaning you could just sell them for $6,500 a couple of days later if the share price runs like crazy high, right? Just for example, all right? So if you play options right for the long term, you can make crazy, crazy returns, but you have to time them properly because if you don't, you could lose everything. So in order to master this skill, you have to learn technical analysis. You have to learn how to trade. You have to learn when you should exit and enter. Because if you enter at the wrong time, if you buy like $30 calls when NIO's all the way up at like 25 and then this thing starts dropping, it's a bad timing to do it. Unless you have a different strategy or there's other circumstances, you just got to be very careful, right? So that's basically what I have for this video, guys. Options, long-term calls, leaps, these could be very profitable for many big stocks out there if you learn to play them right. This video was not comprehensive for everything you need to know about them, so please study them in more detail. But if you hold these long-term options, you can multiply your money like crazy. That actually will yield higher returns on investment than simply holding shares. But there is an expiration to these contracts, unlike shares, which you could hold for as long as you want, for the rest of your lives if you want. Anyways, that's what I have for this video. Please have an absolutely great weekend, great rest of the day, and I hope I brought some value into your guys' lives. I hope you guys learned something about NIO and you guys have new strategies and a more open mind about the future. Remember to do research and trade with paper first before throwing real money in, because it's very likely that it's not going to work out when you first start out. It's very likely you end up losing money. So be very careful, guys. Anyways, thank you all for listening. Please have an absolutely incredible rest of the day, and I'll see you guys in the next one. NIO to the moon, because the long-term future is still very bright. I'm still very bullish, and this strategy really can work. Thank you, and peace out.